Here we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So here we have the hourly price chart. And if we sort of move into the price channel a bit here, we can see that there are some very significant support and resistance zones that are starting to develop for this stock. So in this video, we will be outlining some very specific price levels, which can be used to establish profitable trading strategies for NIO stock in the days and weeks ahead. So as we can see currently, share prices are running into a bit of resistance right near this descending blue line here, which is the 200-hour exponential moving average. So we can see this white arrow that points to this blue line here. It's currently descending, and share prices are having a bit of difficulty here overcoming this price zone. This is somewhat significant because, as we can see here, the share price did manage to break above all of the other exponential moving averages, and it was really only this one 200 period EMA, 200-hour exponential moving average, which did ultimately start to offer some resistance. As we can see here, there is also a very important Fibonacci retracement zone that comes into contact with this area roughly. As we can see here, the 50% retracement of this price move that we have established previously does come in right near this level, roughly 412. And as we can see here, the price high came in at 413. So just to show how we arrived at these numbers, we can use the price high at 461, which was established during the July 31st trading session, and then extend this price movement downward to the price lows, which came in at $3.63. This would have been established during the August 8th trading session. So if we're using this as our current dominant trending price move in the downside direction, here we can see that the share price itself has had a bit of difficulty overcoming this $4.12 area, which is the 50% retracement zone. We did see a bit of a spike higher here previously. We did see share prices move actually to the $4.17 mark, but we would have to consider this to be a false breakout to the top side, given the fact that share prices did start to extend lower. We were not able to establish any sort of base here at these upper levels. So when you see a share price movement to the downside like this, you really have to consider that prior breakout to be a false breakout. We didn't see an hourly close above any of these areas. So that would have been a key warning signal early on that share prices were not actually breaking through this resistance zone in a convincing manner. So as we can see here, share prices have started to establish a bit of support right around $3.85. The price zone that we have here comes in at $3.83. And now, once again, we're sort of testing this $4.12 area. So we do need to see a break above here, because at this point, what we're dealing with is a double top resistance zone. So we can see the first top here, and now the second top here. These aren't exactly matching up, but given the fact that this initial breakout to the top side was considered to be a false breakout, we can suggest that these two areas are close enough in alignment with one another that they can be referred to as a double top resistance zone. So essentially what you have here is a threefold resistance area. Number one, you've got this historical double top resistance. Two, you've got this declining 200-hour exponential moving average. And then three, you have this 50% retracement level for the aforementioned declining price move. So with all of this in mind, this $4.12 level is very critical going forward. We really do need to see a break above here if we do expect share prices to start to form a firm base here and really start to make a convincing move higher. If we pull out to the indicator reading, there are also some interesting developments that should be understood at this point. Currently, what we're looking at here is a bit of a symmetrical triangle on the indicator itself. This is the relative strength index coming in at the bottom of the price chart. This is the purple line, and then the yellow line is the exponential moving average of the relative strength index. So what we can see here is that share prices have encountered some upside trend movement here to the positive direction. But as things currently stand, there is some risk here that this uptrend starts to break. If this does occur, what would this ultimately mean? This would mean that share price trend momentum that was previously positive has now completed itself, and is no longer likely to continue influencing prices. So at this stage, what we would like to see if you're long the stock would be for a bounce here and for the relative strength index to start to move higher. If we see a downside break here, the suggestion here then would be that this new downtrend would be starting to emerge. We've got a shorter term downtrend here in share price momentum showing on the RSI. And as things currently stand, it is much less significant than this longer term trend. However, if we do see a break here, then at that point, the prevailing trend becomes this downtrend momentum indicator. And that would suggest that share prices could continue to move lower. So there are some interesting readings here in the RSI that should be watched going forward. As things currently stand, the main level of support to the downside comes in at roughly $3.85. We can call this $3.83 is the prior price low. We wouldn't want to see prices break below there, because if that were to occur, the ultimate suggestion then would be that we would be seeing a retest of this support zone at $3.63. However, if we did see a break here to the top side, essentially a break of this $4.15 mark, the suggestion here then would be for a more forceful move in the positive direction. And there are a few different reasons for this. One is just from a longer term perspective, there's a lot more upside. There's a lot more distance to the upside to cover rather than to the downside. There's a relatively small space to the downside, relatively small room to the downside. On that basis alone, the suggestion here would be that the potential for extension is much more limited. In addition to that, a break of a double top generally, more often than not, leads to a fresh wave of upside share price momentum. So if we are able to break above this double top resistance zone, it's not going to be so easy, because we do have three different technical signals that are sort of overlapping in the same area here. But if we are able to break above here, it would be a very significant break to the top side, and then it would ultimately suggest that we would be then in store for at the very least a test of the 786 retracement, which comes in at $4.40. But much more likely, this would result in at least a retest of the prior price highs, which came in at $4.61. So here's the current market outlook for NIO Incorporated, stock ticker NIO. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.